Income Splitting Canada, Accountant Mississauga.
Hi, my name's Allan Madan. I'm a chartered accountant and a tax expert in the Mississauga region of Ontario, Canada. How can I income split in Canada? That's the topic of today's short video. For those of you who don't know, income splitting simply means subdividing your income amongst your family members in order to save taxes. It's an easy concept, but practically difficult to implement. The first way to split income in Canada with your family members is through the use of a spousal loan. Let's say, for example, you have $50,000 of cash available that you would like to invest and you are the higher income earning spouse. It would be prudent if you lent that money to your lower income earning spouse and have him or her invest that. Any income earned on the investment would then be included in your lower income spouse's income. You should charge interest on the loan to make sure that it's kosher. This is much better than directly investing the funds yourself because you're the higher income spouse and any income that you earn on those investments would be taxed at a much higher rate. The second way to achieve income splitting in Canada is the use of spousal RRSPs. Let's take the example of someone who didn't consult a chartered accountant in Mississauga and only invests $20,000 in their RRSP every single year. While they'll have a lot of money saved up, and that's great, they'll also have to pay a lot of tax when they withdraw that money. A much better strategy would be to invest $10,000 in your RRSP and $10,000 in your spouse's RRSP. That way, when it comes to retirement, each spouse has approximately the same size of portfolio, and when they both withdraw income, when they both withdraw funds from their RRSP, the amount of tax that they will have to pay on a whole would be less than if all of the RRSP withdrawals were included in one spouse's income. The third way to split income in Canada is to pay salaries to family members. Now, this is if you are a business owner. You can pay a reasonable salary to a family member for work performed. That salary is tax deductible. This is great if you have children who aren't earning any income because they can earn up to $10,320 as of 2009 and a little more in 2010 without paying any tax whatsoever. And still, the salary payment is tax deductible to your business. Similarly, you may consider paying a salary member to a spouse who is in a lower tax bracket than yourself. Remember, the salaries must be reasonable and your spouse must actually be performing some work. The fourth way that I'm going to talk about on how to income split in Canada is through the use of gifts to children. Assets which appreciate in value, such as real estate and shares, can be gifted to your child. Now, I'd like to extend this concept a little further. The appreciation in the assets, let's say they went up from $10,000 to $50,000, and the assets were then sold, the gain would only be included in your child's taxable income as opposed to yours. That's because the income tax in Canada states that capital gains earned by children are not attributed back to the parents. So that's a great income splitting strategy. Imagine if you had bought Apple stock at $20 a share and then immediately gifted it to your child without paying any tax at the time because you bought it for 20 and you transferred it for 20 to your child. 10 years later, the year 2010, Apple stock is now worth $300 per share, 1,500% more. That capital gain would be attributed to your child, taxed in their hands and not yours, reducing the overall tax that you would pay as a family. If you found this video helpful, I encourage you to visit my website, which is shown at the bottom of this screen, http://madanca.com, and also access my free report called 20 Free Tax Secrets on How to Beat the Taxman, the URL for which is shown at the end of this video. So go ahead, visit my website, access the free report, and save yourself a ton in taxes. Thanks again for watching.